Gold and silver has managed to stage their best annual gain since 1979 as we round up the end of 2025. The US stock market ended the last trading session on 2025 on a weaker note, but still managed to remain above their 20-day and the 50-day moving averages. Oil prices whipsaw in the last 2 weeks of December 2025 as the West Texas crude oil managed to stage a rally of 7% from its 14th of December low of $55 US dollar per barrel due to uncertainty surrounding the Ukraine-Russia peace deal and as well as rising geopolitical risk tension in Venezuela. Very good morning to all. I'm Kelvin here. Welcome back to today's Daily Dose of Market Insights and Happy New Year. Today will be the Friday, the 2nd of January, 2026. So as usual, before we jump straight into the gist of today's Daily Dose, let's have a quick look at the disclaimer first. Oops, sorry. Just to make sure that the screen is good. Yeah, all right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right, so here we go. Okay, so as we know that the last week of December is a rather low liquidity trading environment, so not much of a very important news flow. But one thing, there's two particular news flow I wanted to highlight to you guys will be this risk of China deflationary pressure coming back into 2026, pardon me, due to the last month of 2025, we have some Chinese data that is rather weak, especially the PMI data, and that actually prompted the Chinese authorities to issue this front loading of stimulus heading into the last week of December 2025. So there's this particular news flow over here that I want to highlight is very important. That actually allows the Chinese stock market to stage a very strong intraday rally as we're speaking right now. So on the 30th of December, Bloomberg reported that China unveils 51 billion in early spending to support the economy over here. So that's actually front loading ahead of the new year. All right. So Beijing will front load around 295 billion yuan in 2026 to support national strategic and security initiative, as well as investment plan under the central government budget. And most importantly, this 51 US dollar equivalent billion is to boost consumption and investment in 2026. And that allows the Chinese stock market to start on a new year with a rather strong intraday rally as we are speaking right now. So what we could see over here is that the Hang Seng index is up by 2.27%. The now trading close to the session high as we are speaking. And what's important over here is that the higher beta Hang Seng Tech Index, which comprises of the Chinese big tech stock, is up by a whopping 3.91%. And that potential strong start in the Chinese related stock market also allow the Nasdaq 100 to recover from the last trading day of 2025, which was not too long ago. This was on Wednesday. This Wednesday managed to inch up by 0.68%. So this is the Nasdaq 100 E-mini. So like I explained to you guys earlier on, the Nasdaq 100 and the S&P 500, despite their lackluster last week performance of 2025, which is the last week of December, they are still holding above their respective key support, indicating that the short-term uptrend still remains intact. And because of this positive feedback loop coming out from the China-related stock market, that allow this positive catalyst to float back into the Nasdaq 100 E-mini futures that is up by 0.58% right now. And also the lower beta S&P 500 E-mini futures is also up positive at 0.4% right now as we are speaking right now, 11:05 a.m. Singapore time, Friday, 2nd of January 2026. All right. And other news flow more pertaining out from the oil market or over here. So oil market steadies with OPEC Plus and Venezuela in focus over here. So what we could have over here is that the West Texas crude oil, yes, is trading above around $58 per barrel. But later I'll share from a technical analysis perspective, there's a bearish reaction of exactly at the 50-day moving average, which has served a rather stiff resistance in the entire month of December. So every rally where you see in the month of December, it hit around the 50-day moving average, there was some form of bearish reaction for it, and it occurred right again during the Asia session today. And what market participants will be looking at will be over this weekend on the 4th of January over here, which is on a Sunday. There will be a video conference between OPEC Plus member with a decision very likely to actually pause further supply hikes that was actually agreed on before the Christmas break took shape over here. All right, so there are more the key news flow that I want to share with you guys that has taken shape in the last few days. All right, over here. So before we jump straight into the intraday technical outlook on all the broad-based cross asset classes, let's have a quick recap on the annual performance of the different cross asset classes that materialized over the year in 2025. So let me enlarge this chart over here. So let me expand it so that you guys could have a better view of the charts. So hopefully it's big enough. All right. So what you could see over here is that the one that has a stunning return will be the commodities market over here, driven by silver and gold. So silver is up by a whopping 159% for its annual performance in 2025. So this is from 1st January all the 1st January 2025 all the way up to the last trading day of 2025, which is 31st December 2025. So gold is the one of the strongest performer. Silver, spot silver as well as gold. All right, so spot silver 159%, silver 67%, and as well as copper for the 5%. That also surpassed the S&P 500, which is up by 16.4%, and the higher beta up 20%. So what you could see over here within the stock market region, the outperformer is the non-US stock market, primarily relating to the emerging markets. MSCI EM emerging market stock index is up by 30.5%. Emerging Asia up 39.73%. The Nikkei 225 up 26%. Pardon me. MSCI Asia Pacific up 25.28% over here. So emerging Asia and emerging markets, this is where the China and the Hang Seng indices are being located. And down towards the other end of the spectrum, we see a lackluster performance in Bitcoin, which is down by -7%, but not too bad. It's not a double digit. And the US dollar is down by around -9.37%. Put it away that -10%. So this weaker dollar allows non-US major stock indices to outperform the Nasdaq 100 and the S&P 500, which is the US indices, and also allow the strong outperformance of these commodity asset classes, silver, gold, and as well as copper. All right, so very interesting take on this. So you want to find out more details about the recap, which I did in detail. Do take a look at our Asia Pacific trader tab blog, OANDA trading tab blog, where I actually write in greater detail on the market recap on the metals, FX market, and as well as the global stock indices, and also did a bit of forward-looking potential technical analysis outlook on a very longer term basis for at least in the first half of 2026 on these asset classes. Do take a closer look on that. All right, so without further ado, now let us now jump straight into the intraday technical outlook. So this intraday technical is a very short-term levels to watch out for, at least good for a day. All right, so before we go there, let us expand our screen so that we could actually take a deeper, closer look at the charts over here. All right, so I hope the screen is being expanded so you guys can have a closer look at the chart. So let us start with the FX market. All right, so before we start with the FX market, very quickly, let's have a quick look at the short-term trend of a 5-day rolling performance of the US dollar against other major currency. So what we could see over here is that on the last two trading day of 2025, which is on 30th December to 31st December, there's a bounce in the US dollar. But thereafter, this US dollar momentum cannot maintain, and we start to see intraday softness as we are speaking right now. and the dollar is right now is the weakest against the CNH, which is the offshore yen, which is down by negative 0.42% based on this 5-day rolling performance. And very quickly, let us take a quick look at the US dollar index. So the US dollar index continues its weakness after hitting the medium-term range top around 150, where the US dollar index is still being trapped in this complex sideways range configuration since 1st of July 2025, important swing low level of 97.40, where it managed to survive on the 17th of September. So what I could see over here is that after hitting this medium-term range top / range resistance at 100.50, the US dollar index continues to inch downwards and going to print a series of lower high. And recently, that particular rebound on the 31st of December got rejected exactly at the 20-day moving average, where this lower high got printed since 28th of November. And how it rejected? It rejected based on a daily bearish reversal candlestick called a shooting star. And we have a negative follow through in today's Asia session, indicating that whatever rebound that we see from the 24th of December all the way to 31st of December is a corrective rebound rather than the start of a bullish impulsive up move for the US dollar, taking into account of using the US dollar index as a gauge of general dollar strength or dollar weakness. So at least from a very short-term perspective, the short-term US dollar weakness still potentially remains intact based on the technical analysis scenario or elements that has started to emerge right now as we are speaking, 11:12 a.m. Singapore time on a Friday, 2nd of January 2026. So this is the US dollar index. Now, let us now jump straight to the individual 4 US dollar major pair that we cover on a daily basis, starting with the euro dollar. So the euro dollar managed to stage a bounce right exactly off the rising 20-day moving average. And as we are speaking right now, the hourly RSI, okay, let me expand this so that you guys could have a better look. Right, yeah, I think this should be better. All right, removing the watch list. So the hourly RSI of the euro dollar managed to stage a bullish breakout from a parallel descending trend line previously intact from the overbought level of 23rd of December. So indicating that the short-term bullish momentum has now starts to reel its head back again into the euro dollar pair. So with that, we'll still maintain our bullish short-term bullish intraday outlook on the euro dollar using an adjusted short-term pivotal support for today at 117.10, which is pretty much close to the 20-day moving average as well, and confluence with the key minor swing low area of 17th of December and 9th of December, where it managed to stage a bullish consolidation before staging a retest at the 1790/1.18 resistance level. So maintain that intraday bullish bias for the euro dollar using 1.1710 or 11710 as my short-term pivotal support. Two key resistance level to watch out for today will be 11790/118 figure, followed by 11820 next, which is a which is the minor swing high area of 23rd of September and 24th of September 2025. Only a bearish breakdown and an hourly close below 117.10 that would invalidate today's bullish bias on the euro dollar to see a rather choppy intraday corrective decline sequence unfolding towards 116.80 followed by 116.55, which confluence with the rising 50-day moving average. So that's for the euro dollar. Onwards next will be the sterling dollar. So the sterling dollar also did a bullish reversal candlestick right exactly at the retest of the 20-day moving average and confluence with the lower boundary of this ongoing minor ascending channel drawn from the low of 3rd of December. And also the RSI managed to stage a bullish breakout as well, indicating the revival of short-term upside momentum for the sterling dollar. So with that, I'll be using an adjusted short-term pivotal support for today at 134.30 to have a bullish intraday bullish bias for the sterling dollar. First resistance level to watch will be 133.50, 135.50, pardon me, 135.80, which is the Fibo extension cluster level, and as well as the minor congestion area of 19th of September 2025. Only a bearish breakdown and the hourly close below 134.30 will see the invalidation of today's bullish bias on the sterling dollar for a choppy minor corrective decline to retest the 200-day moving average confluencing with the next near-term graphical support area or level at 133.65. Only a breakdown below 133.65 will unleash a deeper minor corrective decline sequence towards 133.25, maximum 132.70, which confluence with the rising 50-day moving average. So that's for the sterling dollar. Next up will be the Asia Pacific currency, starting with the Aussie dollar. So the Aussie dollar staged a very strong rally during the December period, in line with this so-called in general risk-on environment in the global stock indices during this period of time. So what's interesting is that the weakness of the Aussie dollar that was prevalent in the last 2 trading days of December 2025 managed to found a support right exactly at the rising 20-day moving average, and also the lower boundary of this ongoing minor ascending channel, which I drew from the low of 21st of November. So with that, I'll be using an adjusted short-term pivotal support for today at 66.60 or 0.6660, which confluence with the rising 20-day moving average, maintain this ongoing bullish bias on the Aussie dollar. First resistance level to watch will be the 52-week high that was printed on 29th of December at 67.20, 67.27. A breakout above 67.27 potentially sees the next intermediate resistance coming in at 67.60, 6760, which is the 11th of October 2024 high. However, a bearish breakdown below 6660 will invalidate today's bullish bias on the Aussie dollar to see another round of minor corrective decline sequence unfolding, exposing the first near-term support level at 66.30. Only a breakdown below 66.30 will see a deeper minor corrective pullback towards 66 figure /65.90, which will confluence with the rising 50-day moving average coming very close to the 65.90 level. So that's for the Aussie dollar, still maintaining that bullish bias using an adjusted pivotal support at 66.60. All right, so let me expand this screen over here. So next up will be the dollar yen. So the dollar yen was rather messy over here. So it did a push up. This push up can't maintain that momentum and starts to do some sideways movement. So with this push up from the 20-day moving average, where it didn't collapse now after BOJ last meeting of 2025, we will have a neutrality bias for today, given the fact that we now also starts to see returning dollar weakness potentially on the euro dollar, the sterling dollar, and the Aussie dollar, which I covered just a while ago. So with that, I will flip to a neutrality stance for today on the dollar yen, neutral between 157.15 over here, and the lower limit will be 155.90, 155.90, which confluence with the 20-day moving average that managed to find support after the last meeting of BOJ in December. Right, so that's for the dollar yen, neutral between 157.15 and 155.90. Okay, so onward next will be the major stock indices over here, starting with the Asia Pacific currency. But before that, let me expand this screen with is the Hong Kong 33 over here. So the Hong Kong did a strong bullish reversal, breaking above the 20-day moving average and the 50-day moving average. So still recall that ever since the low of 21st of November, it has been trading in this kind of sideways range. All right, over here, can't break above the 50-day moving average since 2nd of December, which is start of December. And today's strong bullish reversal candlestick being what I call triggered by that front loading of that China stimulus measures, which I covered earlier at the start of the daily dose, allow us to have a bullish bias for today using today's intraday low, which is 25,545, yeah, 25,545 as my short-term pivotal support for the Hong Kong 33 CFD index, representing the Hang Seng index. So right now it's actually testing the very important potential double bottom. So let's say if this is indeed a double bottom, a minor double bottom over here, is the first bottom. So let me change this into a different color. Oops. All right. And this will be the second bottom. All right, a breakout and an hourly close above 26,245, which is the neckline resistance of this potential minor double bottom, will see a much more higher probability of a start of a new bullish impulsive upmove sequence for the Hong Kong 33, for it to see the next intermediate resistance coming in at 26,405, followed by 26,670, which is the minor swing high area of 14th of November 2025. Only a bearish breakdown below 25,545 will negate today's bullish biasness to see it floating down towards the lower limit of this double bottom at 25,310, maximum 25,080, which is the key support of this minor double bottom that managed to survive since 21st of November last year at 25,080. Excuse me, a bit of sore throat. Okay, so having a bullish bias today on the Hong Kong 33, representing the Hang Seng Index due to the strong bullish reversal intraday performance, as we are seeing right now at 11:21 a.m. Singapore time, using 25,545 as the short-term pivotal support level. Right. Onwards, next will be the Japan 225. So the Japan 225, representing the Nikkei 225, also managed to find steep, firm support level ever since its bullish breakout above the 20-day and the 50-day moving average on 19th of December. Every time it touched down the 20-day and the 50-day moving average, there's rebound being seen, but still can't break above the minor range top of 4th of December, stretching to 12th of December at 50,985, where it got retested on 25th of December before trading downwards. So what you could see over here is that the hourly RSI also managed to shape a series of higher high, indicating some form of bullish momentum that is still intact on the Japan 225 CFD index, representing the Nikkei 225. So with that, I'll be using an adjusted pivotal support level at 50,180 for today, maintaining that bullish bias on the Japan 225. First resistance level to watch will be the minor range top of 50,985, a breaking up above 50,985, hourly close above it. We'll see the continuation of this bullish momentum, seeking out the next intermediate resistance at 51,530, which is a medium-term range resistance level where the price action can't break since 4th of November last year, which is at 51,530. Only a bearish breakdown below 50,180 short-term pivotal support for today will invalidate the bullish bias on the Japan 225 to see another round of choppy minor corrective decline sequence unfolding, exposing the next near-term support level at 49,850, 49,500. All right, so that will be the Japan 225. Next up will be the Germany 30. So Germany rallied up as expected over here, so hitting a 24,670 minor swing high on the last trading day before staging a pullback in today's Asia session. So with that, I will have a tightened short-term pivotal support level, taking into account of that former minor swing high of 12th of December and 29th of December, where previously it did a bearish reaction before staging a minor bullish breakout on 30th of December. So that will be my adjusted short-term pivotal support for today, 24,430 on the Germany 30 CFD index, representing the German DAX. So with that, still maintaining that bullish bias. First resistance level to watch will be the 31st of December minor swing high at 24,670, a breakout above 24,670, potentially see a retest at the current all-time high area, which is a Fibo extension level as well at 0.678, taken from the low of 21st of November at 24,795, which is the current all-time high. Fibo extension level at the 0.618 at 24,836, almost confluencing at a similar level. Only a bearish breakdown below 24,430 will negate this bullish bias to see another round of minor corrective decline unfolding, retesting 24,235/24,120, which confluence a rather important element, which is the lower boundary of this ongoing minor ascending channel that is still intact since the low of 21st of November, and also the rising 20-day moving average, which also confluence with 24,120. All right, so that's for the Germany 30. Next up will be the major US stock indices, starting with the US Wall Street 30, representing the Dow Jones Industrial Average. So I could see is that there's a bounce off the 20-day moving average. What's interesting, you could see over here is there's a bullish divergence that starts to form, indicating that sell-off that has taken shape on 30th of December and 31st of December starts to ease off. So with that, we will have a bullish bias for today on the US Wall Street 30. Two key support level to watch will be the first intermediate support level, which was today's Asia session low at 48,100. Pivotal support coming in at 47,870, where we see a strong form of bounces that has taken shape previously on 11th of December 18th of December and 19th of December last year. So using 47,870 and also very close to this dotted green line here. So this dotted green line is the median ascending channel line of this ongoing medium-term ascending channel that has been in place since 23rd of May 2025 low. All right. So with that, using 47,870 as my short-term pivotal support for today on the US Wall Street 30, maintain that ongoing bullish bias with the next resistance level coming in at 48,480. Let me put it in writing. 48,480 before retesting the current all-time high area at 48,770, 48,870 that was printed on the 12th of December. All right, so just bear in mind that the Dow Jones Industrial Average managed to have a fresh all-time high on the 12th of December. Only a bearish breakdown below 47,870 will invalidate today's bullish biasness on the US Wall Street 30s to see the extension of this minor corrective decline sequence extending further towards the downside to expose the next near-term support level at 47,530, which confluence with the rising 50-day moving average, maximum 47,245, which is the minor swing low area of 2nd of December. So that's for the US Wall Street 30. Next up will be the S&P 500. The S&P 500 also managed to stage a bounce right exactly off the 20-day moving average, and also the hourly RSI also shaping that bullish divergence as well, indicating that the 30th of December and 31st of December downside momentum has eased off. So two key support level to watch today will be Asia session low as we are speaking right now, 11:27 a.m. Singapore time, 6,853. Pivotal support level will be at 6,822, confluencing with two important elements, the lower boundary of this ongoing minor ascending channel drawn from the low of 21st of November, and as well as the rising 50-day moving average. So using 6,822 as my short-term pivotal support on the S&P 500 CFD index, still maintaining that intraday bullish outlook or bias. First intermediate resistance level to watch for today was 6,925. A break above it will see a retest at the current all-time high on the Christmas trading day, which is at 6,953. That's the intraday high. Only a bearish breakdown below 6,822 will invalidate today's bullish biasness to see a extension of this minor corrective decline, exposing the next intermediate support level at 6,780 next. So that's for the SPX 500. Next up will be the tech-heavy Nasdaq 100. So bear in mind, the Nasdaq 100 hasn't broken above the fresh all-time high, and it left the fresh all-time high by a significant percentage. So the fresh all-time high previously was only made on the 26,290 that was on the 30th of October. And if you look at the current price action right now, it still has some more way from the fresh all-time high, all right, around 3%, all right. So the reason why it's underperforming is because of that higher so-called valuation in AI-related mega cap technology stock that is having a having a higher weightage on the Nasdaq 100, and we see the sector rotation into the other prior laggard sectors like the industrial and financial. So that is explained why the Dow Jones Industrial Average is outperforming in the month of December last year. So, but nevertheless, it's still holding above a support level, now back above the 50-day moving average, and also the hourly RSI is flashing out a bullish divergence as well. So, no point having a bearish intraday outlook of the Nasdaq 100 given the current positive price action behavior, both from a momentum perspective and the raw price action perspective, as we are speaking right now, 11:28 a.m. Singapore time. All right. So with that, I'll be using a short-term pivotal support at 25,195 for the Nasdaq 100, having a bullish bias for today. First intermediate resistance level to watch out for will be this former minor swing high area of 30th of December, where it can't have a proper breakthrough, which is at 25,600 level, 25,600, and put writing. Above 25,600, we'll see a retest on the Christmas Day high level, and as well as this minor range top that has been formed since 8th of December last year at 25,760, 25,800. 30. However, a bearish breakdown below 25,195 that would invalidate the bullish bias on the Nasdaq 100 to see a deeper corrective decline unfolding towards the next near-term support zone at 25,000 / 24,870. That sum up all the intraday technical outlook on the major stock indices. Let us now proceed to the commodity asset classes, starting with gold XAU / USD. So gold managed to hit a fresh all-time high at 4,550, which was I previously highlighted. 4,560. That will be the next resistance level to watch after breaking out above 5,381 previously. So it hit the level before doing that nasty intraday sell-off during the last week of December due to a lower liquidity trading environment over here. So with that, very interestingly, the sell-off managed to stop right exactly at the 20-day moving average. And what we could see also a very clear bullish divergence that has been formed on the hourly RSI. And now the RSI is breaking above a parallel descending trend line, indicating some form of bullish momentum coming back, and also indicating that this decline from the high of 26th of December all the way down to the low of 31st of December is more of a minor corrective decline sequence rather than the start of a medium-term downtrend for gold XAU / USD. So with that, we'll be using a short-term pivotal support zone for today to maintain that bullish bias on gold XAU / USD 4,267 / 4,243, which is also confluence with the lower limit of this ongoing medium-term ascending channel that I draw from the low of 28th of October 2025, and as well as the former minor swing high of 30th of November and 1st of December and 5th of December that have a bullish breakout previously on the second week of December. Maintaining that bullish bias, two intermediate resistance level to watch before a retest back to the current all-time high area at 4,450, 4,560 will be 4,403, 4,430, followed by 4,485. Only a bearish breakdown below 4,243 that would invalidate today's bullish biasness to see the continuation of this corrective decline sequence unfolding to test the important medium-term support area of also confluence with the rising 50-day moving average at 4,180 / 4,155. Also confluencing with this minor swing low area of 4th of December and 11th of December as well. Right, so that's for gold XAU / USD, still maintaining that bullish biasness using 4,267, 4,243 as the short-term pivotal support for today, taking things one step at a time. Two key resistance level to watch from the intraday basis, 4,403, 4,435, followed by 4,485. Lastly will be the West Texas crude oil over here. So the West Texas crude oil managed to stage that bounce, but this bounce managed to stop right at the very closely to the 50-day moving average, which is at 58.76, 59.18, and also now trading back below the 20-day moving average, with the hourly RSI still being kept by a parallel descending trendline resistance. So with that, I will still have a bearish bias for today on the West Texas oil despite this bounce. So this bounce that's from the low of 16th of December all the way up to the intraday high of 26th of December is more of like a corrective rebound. So using 58.76 / 59.18 as my short-term pivotal resistance zone on the West Texas oil, I do have a bearish bias for today within this sideways range configuration. So range configuration support level will be at 56.80, which is the minor swing low of 27th of December Singapore time at 2 a.m. before the bounce take shape. So a breakdown below 56.80 will see a deeper slide towards the 55.75 / 55.23 next, which is the minor swing low area of 16th of December and 17th of December. Only a bullish breakout above 59.18 will see the extension of this minor corrective rebound extending further towards the upside, towards the psychological level at $60, followed by 60.56 next, which is the minor swing high area of 5th of December. Right, so that's also sum up all the intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar for today. What are the key data to look out for? So today will be also a rather quiet day, 2nd of January. So stretching into the European session, we have some, this concept as I not important, only a tier 2 UK data. So that is the housing price data for December out at 3 p.m. Singapore time. And we have a series of finalized manufacturing PMI data for December up from France, Germany and the Eurozone between 4:50 p.m. to 5 p.m. Singapore time over here. Then followed by 5:30 p.m. we have the finalized manufacturing PMI data for the month of December for UK. So that may have some form of movement on the various FX major pair ranging from the euro dollar and the sterling dollar, given that we have none other tier 1 data to take note of over here. And at 10:45 p.m. Singapore time, they will have the finalized S&P Global Manufacturing PMI data for US for the month of December. So that could also have some form of impact on the major US stock indices and as well as the major US dollar pair during the release of this finalized PMI manufacturing data for US compiled by S&P Global. And also not forgetting on the 4th of January, which is on a Sunday, there will be OPEC Plus meeting, but that shouldn't be a big surprise as most likely the consensus will be a further pause to further supply hike in at least in the first quarter of this year. So that has really been priced into the market. So with that, let's sum up today's Daily Dose of Market Insights. I'm Kelvin here, wishing you all guys, for those who are still celebrating the new year, restful weekend, recharge, and we are back again on next Monday, 5th of January. Thank you.